and Duncan, also known as Flood Capital. How do we intro you again? Shitcoin scavenger and
enthusiast.
Shitcoin enthusiast? Can we say shit in the intro?
Why don't we say altcoin investor?
Altcoin investor, that's just everyone in the space. It's the most nondescript.
Low cap.
Low cap gem hunter, 1000x.
Hi, everyone, and welcome to another episode of the Hive Mind podcast. I'm Jose, your host and head of Delphi Labs. And today with us, as always, we have Ceteris, who's the head of Delphi Research, Jan, who is the managing partner at Delphi Ventures, and Flood Capital, also known as Duncan, or Duncan, also known as Flood Capital, who has requested to be introed as a gem finder, an altcoin hunter. So we're sticking with that for this episode. So we've got a full docket today. I think we're going to start with what's been on everyone's mind on Twitter and everywhere else, which is the Eigen layer airdrop and token announcement this week. So there's a lot to dig into here. I suggest we start with just the airdrop. People were raging about this airdrop. There was a bunch of stuff that people were mad about. I think if I had to summarize it, I would say it was the VPN blocking, like letting people farm without a VPN and then forcing a VPN to claim, which, I mean, it's hard to argue that you wouldn't be angry at that one. It was the Pendle situation, which I believe got resolved. Like the fact that YT people weren't getting the full yield. It was the non-transferability, and it was the fact that the snapshot was in the past, right? And people kept farming for ages afterwards, and there was a bunch of people who like miraculously withdrew the day after. So yeah, it was in the charts. So yeah, guys, what are your takes? Who wants to start here?
I can start. So let's see. I think the two is the non-transferability and the geo-blocking. I think the non-transferability is not a massive deal. I understand why teams want to do this. It's also not necessarily terrible for users because, I mean, I'm not like a tax lawyer or anything, but I'm pretty sure they're just zero basis when you get them because there's like no value to them. They're like actually valueless. So I don't know if that's the worst thing. Like Element Finance did this a few years ago and it didn't work out well for them. Safe just did this. They just made their token transferable after like 2 years or something of not being transferable. I think the reason people don't like it, one of the nice features about airdrops is that they actually go to, obviously there's a lot of sibling in airdrops, so you got to keep that always in the back of your mind, but they do go to like retail participants before anybody else gets liquidity on the investment, right? And so that's always been like the nice thing about it is that if you get this airdrop of this project and it launches at like this really high FTV that you don't think is sustainable, you as retail getting this airdrop token actually have the ability to like sell it before team and private investors can. So that's always been like a nice feature of airdrops to me. And by making it non-transferable and by starting the like unlock clock for team and investors at the same time, it's not clear that by the time it's transferable, everybody else also won't be unlocked at the same time too, right?
We said that's not clear. They haven't.
Well, it's like up to like governance proposals and stuff. Like,
well, they have to meet benchmarks, right? And so that's once they meet those benchmarks, the unlocks will happen. So I think it's reasonable to assume that they will happen before team and investors.
Yeah,
what are the benchmarks?
And by the way, we're investors in Eigen layer, and see the disclaimers at the end for none of this is investment advice, etc. But yeah, keep going.
So that's like the first one. I don't know if we have to talk.
Well, what are the unlock or what are the benchmarks for the unlocks?
I think a lot of it is like
the main reason that teams do this non-transferability thing is someone who's kind of dealt with these token considerations a lot is just legal advice, right? And in general, a lot of these things are just legal advice. Like the non-transferability, the idea is that if you have a non-transferable token and then eventually you distribute it broadly enough that the DAO itself can vote to make it transferable, and you or the team didn't vote in that decision or didn't have a controlling vote in that decision, then it's harder for the SEC or a regulator to argue that it was you that did this. And it's the same thing with the VPN blocking, right? The reason they do that is to avoid the US. So yeah, I understand the argument for it. I also think there's like some benefits to it in terms of like the advantage of points to some extent is that you don't have a token price, and so you can imagine whatever token price you want and have this like mental masturbation, which people do with these spreadsheets and stuff. And with non-transferability, it kind of allows you to keep doing that to some extent. You know, you have another season of Eigen is going to trade at 20 bill or 40 bill or whatever, and people can, so it can keep the stuff going longer. I mean, I'm trying to look on the.
It's kind of, I think the big issue is basically the disconnect between expectations, which that people had when they deposited those tokens, which are based on what market norms are, right? That's if you're when you're participating in these airdrops, you assume unless the protocol is telling you otherwise, it'll proceed like most do, and most usually give you the token up front. So I think that's really where the source of frustration is, because this was a long airdrop, so there's a lot of opportunity cost and then a lot of risk that was kind of taken, right? So it's not purely a free lunch, and so you had the fact that there was no discussion around these not being unlocked when they were expected to be. And then I think the geo blocking and VPN blocking is a bit of a rug, right? Because you allow them to participate but not claim any of the benefits.
So this is the one. Yeah. So this is the one that I feel pretty strongly about. I understand the non-transferability. I don't think it's that big of a deal. I understand why they're doing it, but I just don't think that you should be giving out points to people without geo-blocking for like a year, and then when you launch it, you block all these people. And I hate the tweets on Twitter where people just talk about, oh, another airdrop. People are complaining about free money. It's like, no, these people that you're geo-blocking 100% have lost money by being in this protocol, which has helped the protocol. It has helped the protocol's metrics, right? It has helped them look stronger, higher TVL, more like demand. And they paid a real cost by, there wasn't a lot of risk with Eigen. It was just the smart contracts, if those could get hacked, but there is some non-zero risk there. And then there's the opportunity cost of just locking up that money for like a year. And you're giving these people points for like a year. And then at the end, you're saying, oh no, you're actually not getting anything for this the whole time.
Yeah.
So that's
how many people are actually not going to be able to like use a VPN or travel or whatever to claim this airdrop? I feel like most people will.
I don't know. They said that they're going to blacklist addresses if
really?
if any yeah, I think they're being pretty strict on it.
Yeah, that's what I was going to ask. Could you just fly? So they're blocking VPNs.
Yeah, you could if you had a lot. Yeah, you probably want to fly somewhere. I guess it's probably worth the.
But you blacklist an address if they like connected from the US. That'd be pretty ridiculous, right? That doesn't mean you're a US citizen.
So that's my issue with it, and it's because they did points. Listen, if you don't do points, then whatever. Like, there's a lot of protocols like blocking.
Let's get into points
and everything.
Then, but before I think that's the next topic. Just one note: I do think the non-transferability and starting the investor tick like clock and team clock at the same time is dodgy. I feel like the spirit of the cliff is that it starts once the token is liquid, right? And so really the clock should start once the token becomes. I
agree with that. When I said I don't care about I agree. I think the non-transferability is fine with like the clock not starting at the same time.
Yeah. I think the clock starting is certainly bad, but it's only really bad if there's an overlap where one is starting to unlock either at the same time. So basically, if you have team unlocking around the same time as airdrop, that'd be really bad. But it's and I think it's also still bad if it's pretty close, right? Because those unlocks start to get priced in, and it's pretty detrimental to those who farmed and kind of the value of their airdrop.
Yeah, and also let's there's this last comment on this again because I feel strongly about this is like airdrop farmers do deserve compensation. Like they are taking risk, and like I hate the idea. I understand like not liking civil farmers and everything. Like 100% agree with all that. A lot of these protocols would have 0 users. Listen, nobody there's no point to have Eigen. We created $8 billion of LRTs because people were farming points. Like there's been no product here yet besides points, right? And this is like a lot of money that's gone into this and people taking risk. And so I don't think it's fair to like call them entitled and everything.
Yeah, no,
Ceteris,
I
none of the
agree.
people. Should we?
I think it depends on kind of what you're doing for those points, right? If you're actually taking risk, or there's opportunity cost, or you're providing liquidity, then by all means, I agree that that value is deserved. And then certain things on kind of the other end of the spectrum, where it's just kind of logging in and interacting that way, it's you have a bit smaller of an argument to deserve those points, because you're not really taking much risk. You're kind of just gaming it to some extent, which it's still a valuable metric to the protocol. It helps them.
Let's move on to points then. Let's move on to points.
Yeah. No, just on that though.
I think it's worth going into this a bit more though, just because we've done points already, and
we haven't. I mean, like the whole meta of people
though.
Been saying on Twitter, like points are dead. Points. Eigenlayer has killed points.
Yeah, but we can still go into points. Let's finish this like section.
Yeah. Well, I think it expands beyond just like, go ahead. I'll let you finish it up.
Oh no, all I had to say is that like I saw a funny Discord thing the other day about someone asking if they get points for saying GM in the Discord. It's like people can't even just say GM because they want to say GM anymore. They need to get points for it.
So that was the point you needed to make.
No, it seemed like Jan wanted to keep going on this topic.
Well, I was going to go into more just kind of the I guess going into kind of what we've seen on Twitter, which is the animosity towards VCs and that whole element. I don't know. I feel like
Well, this whole thing is like pretty bad. I feel like
I agree. This is bad. There's no real supporting argument for this. I think everyone looked at it as soon as it came out and just kind of it's hard to defend the approach. But it's worth noting that a lot of this stuff isn't really VC driven, right? And so I think you end up kind of pointing the finger that way, but it's not really the case that
VCs but I think who's going to benefit
decisions
from it? Like the team and the VCs probably. Like if you start the clock at the same time and like
that's
like for sure.
And like don't give an airdrop out to like
you kind of like crypto Twitter all of a sudden kind of became socialists. When price starts going down, it's how dare these people make money on their investments. I agree. This is not in that uniform, but I think that perspective was applied as a blanket to the entire space. And
I think
more broadly,
and I think a lot of VCs would agree that the timer should start when the token becomes transferable and not when this non-transferable token is issued, like for sure. But
it's a short-term game.
VCs have way less impact than people think on these protocol decisions, and also VCs don't benefit from protocols like botching their airdrops. Like if anything, you're harmed from it alongside everyone else. So I don't know. I think the sentiment is it's like whenever price goes down, people start with a sentiment, and
I think
like retail only sees. Go on. Populist,
like
Duncan,
Mr. VCs. I think that I've been saying this since we started recording this, that these low float high LTV things are just fucking going to ruin the industry, and no one cared because everyone was making money. And now
we all agree with you. What do you mean?
I know, but like I feel like when you're saying like people complaining on Twitter, like not that many people were complaining on Twitter about it until stuff started going down and people realized what was happening and are like, oh, this is actually a massive.
Well, it's going down. It's not like these VCs are selling. All of this stuff is locked. Like the only people that have actually made money are people who got airdrops and sold. Like this is literally low float FTE tokens. The only unlocks that are happening are from the previous cycle. It's none of these new ones are unlocking.
Yeah, so I think, but like they can. When does Celestia? I feel like Celestia was like the first one of the cycle. Starts in October.
Yeah, we're halfway there.
And we had ARB happen, which is from last cycle. And ARB
exactly like
one,
this whole the only people that have made money are airdrop farmers and traders. Like this, you're yelling at VCs who are still locked up and doing nothing.
I know, really it's gonna. If we think this is bad, just wait till the VCs unlock. Then we're in some real trouble. Like if that unlocks it in this, but like it just shows that.
So then it's like boo capitalism. I mean, like
the bid for no, it's just the way that they're designing this shit is so ridiculous, and the way that people are. I feel like just like aping into these things that don't really, it's like even when you looked at Eigenlayer at like $1 billion valuation, I feel like a lot of the conversations a lot of VCs are having is like, yeah, like this is like super ETH line is probably going to pump like if they have a good launch. But like, does the business model even make sense, right? Like at $8 billion of staked ETH, like, is there even demand for these liquid staking tokens, right? It's more just everyone thinks it's going to make money at like a 500 mil val or $1 billion val because, you get these optics in there, you hype it up, and then you just try and sell the tokens. It's not like, oh, this is going to help bootstrap a whole new,
No, I think
area
Eigen is pretty cool. Maybe we can go into the. I think we have another docket to go into the actual fundamentals of Eigen.
I think on Duncan's point though, like where Duncan is right here is that we created a whole new vertical and changed like actual fundamental ETH market structure over like an unproven protocol. Like it's not like Eigenlayer launched and then there's a lot of demand for AVSs and restaking and then all these LRTs got made. We made all this before, right? Like we made all these products, all these LRTs, took all this money out of Lido, out of all these other places. We did all this like way before it's actually proven that like this is going to be a real thing, just based off hype.
Right.
And, like that's the backwards part of this industry.
Yeah,
well, it's not going to be a real thing for VC. Like it's not going to be profitable for VCs, or it might be like a little bit, unless it becomes a real thing. Right now, it's only profitable for the farmers and the airdrop. And
I think that a lot of VCs will still make money. Like, what, it has to go down 90% for VCs to be underwater?
It's not right, but if you're describing the reckoning that you think is coming on some of this stuff, then
I know, but I think that like
profitable, especially when you consider opportunity cost and when the investments were made. Right, like a lot of these were made years ago.
Yeah, well, I don't know if the VCs will get out of this unscathed either, because there's so many of them that are like this. Right. Like,
I mean, the best
so many
VC
projects that like don't make any fundamental sense, like on terms of their $10 billion plus valuation. So VCs might end up getting screwed.
I think a lot of VCs will underperform for sure.
Listen, like how many VCs are gonna outperform if they just like
but the ones that but the ones that outperform are literally the ones that like get into these rounds and are just trying to extract the value immediately as soon as they can. Like, get me out of this at a 50% discount, get me out of this thing, 10 billion, 20 billion, whatever it is for Celestia.
Yeah. I mean,
do they keep getting in? But do they keep getting in?
Get me out of this. And like those are the VCs that are going to do well. It's super extractive. They know it's not worth anything, and they're just like have these big headline numbers, and it's like, get me the hell out of this thing.
I mean, I think in some market scenarios that's the case, and in others it isn't, right? Like a lot of people, there's a lot of examples last cycle where people sold Sol and Luna, right? Like way too early as VCs that got in it. It just depends if the project ends up being real or not. And of course, like these things are super hyped, but hype is like a pricing in of future expectations of what this will do, right? Like the Eigenlayer has hype because people think, for like rightly or wrongly, and obviously like you guys think wrongly, that it's going to be super important for the Ethereum ecosystem. And so like, what is the solution here? Like you can't stop hype. Like VCs are locked. Like everything that's happening in public markets is just retail on retail violence that they then blame on.
No, but I think
VCs,
that it's
right. And then the other point on VCs is just
that are hyping each other up.
I think
hyping these projects up.
The other point
they're like the thought
VCs,
leaders.
Yeah, but that's like the incentives, right? That's just markets. You invested because you're hyped, and because you invested, you're incentivized to hype. Like it's not like they were born with these bags, right? They chose to invest in them, and therefore they're excited about it and will share their thoughts on them. If they're saying like misleading or like false things, that's another thing. But I don't think that dynamic in itself is the problematic one. I don't know. I agree that like that VCs, crypto VCs specifically, like the brand name VCs are in a very privileged position where they have access to these to these deals very early on. But I also think retail misses out on the fact that for every Eigenlayer, there's like 100 or 1,000 things that never launch a product, never launch a token, never do anything. And a lot of these investments and things that are launching this cycle or last cycle are made at the like bottom of the bear, where crypto Twitter is comparing crypto to online poker and saying it's dead, right? Like it's just going to be like online poker in 2008 or whatever. Like everyone's desperate. A lot of these rounds, like, yeah, I don't know. It's worth keeping that context in mind. While I agree that it's flawed, that's why we're incubating this, this ICO protocol. That's why we're super hyped about stuff like Echo. Like, I think there's better ways to do this stuff, but I don't really see what the solution is. Like, these things need
I
to,
think that those are like,
it's just it's like individual examples extrapolated to the entire space is kind of the mistake that's being made, I think.
I think there's like a lot of these projects that have launched in the past 3 months, like one a week type thing.
Right, and then we'll see what happens when those unlocks, right? Like, there's no guarantee that these VCs are actually going to make any money.
Yeah, we'll see. But I think
a lot of these guys underperform.
A
lot of these like VCs, if you look historically on the crypto side, it's it's similar to just traditional VC where it's very power law. You'll have 1 or 2 winners that'll really do well, and then you'll end up not making money on the rest. But all of those other ones that you don't make money on, plenty of people are, right? Like, to some extent, VCs are subsidizing the farming and the gains that other people are having by interacting with these protocols, and there's no guarantee that they'll actually make any money on it.
Yeah. All right. So we talked about our VC's Evo. Should we talk about points? That's the other thing that people have been reacting to the Eigen layer thing.
Talk about points.
Saying, I think everyone says points are dead. Are like everyone says points?
That's a stupid take.
No, that's just a bad take.
There's smart people saying this take. All right, like can we summarize then why it's a bad take, and then we can move on quickly. I agree that it's a bad take, by the way.
Again, it's pointing at one bad example and throwing the entire model out the window because of one bad example. Points are just a derivative of tokens that you receive without getting tokens, right? So it's just like another kind of game of incentives that's being played, but directionally they're very similar in terms of what they accomplish, and what you do is just a more precise way of distributing incentives throughout seasons, and particularly a good way to kind of get a decent amount of supply. It actually helps reduce the low float, high FTV problem, because it allows for people to kind of farm these tokens and get benefits without actually having to distribute them. And so you either distribute the tokens. So imagine if you didn't have points and you distributed tokens right away, you'd exacerbate the low float, high FTV problem, right? But if you can actually, instead of giving out 3% of supply, you can give out 10% through points and then release all 10 at once.
Granular way.
Right. So the points are accumulating, but you're not having the low float, high FTE problem. So it actually helps you launch with a higher initial float because you've been doing points, and you can be much more precise, and there's less
flexible.
Chaos.
You don't need a governance proposal to change them and stuff like this. Yeah, I agree with all that.
If you're against points, you're kind of against tokens. It's like
no.
I
disagree. So first of all, I agree with you in general, the points are here to stay, and they've also been like super profitable for users. Like, Athena was ridiculous. Even Eigenlayer, which is like universally hated, was probably like a 50% APY if you're in from the beginning on ETH, which is the best yield on ETH out there. And some of the Solana ones were even more ridiculous, especially for smaller amounts of capital. But to steelman the other side, or what Gabe would say, and we're having these discussions in the company chat, they're not the same as tokens because they're fully trustful. Right, it's literally an entry in a centralized database. They don't have to issue the tokens to the points holders if they don't want to. They can issue whatever number they want. It's completely intransparent. They can do stuff like VPN block every country. They could do whatever they want. Like, you're fully in their hands. So it's moving from tokens so that they're the same mechanically, but in terms of trust, they're like a fully centralized version, right? That's the issue that games. That's like the moral.
Tokens you could say are similar though. Yeah. You can argue tokens are similar. Like, tokens, you could in theory geo-block participants after they deposit liquidity, and so when they have to claim the token, you can say, you can apply the same rules, and so it's slightly less centralized, but directionally it's still similar. Like, you can still rug people in the same, like the risks to that you're describing for points can still be applied to the token side.
Well, if you're doing tokens, you'd be doing like
smaller
yield
degree
farming. You'd be doing
but then you have
but like when you go claim, you can say no, right? Like, it's still centralized in that sense, in terms of what they can prevent.
But you have way more
from the contract
when it's liquid, like just thinking about the granularity of how to distribute it, and like also the low float issues. But yeah, I feel like
there's definitely differences between them.
The
but
points are
directionally
good,
similar.
people like feel like they're earning something over time, so you can kind of like string that carrot out over a really long period. Like Eigenlayer did it for a very long time. I think Hyperliquid's done a really good job at it. Like I don't see funds going away anywhere.
And also you can keep doing them after the token is live, right? Like you can do season 2s and season 3s like Athena's doing. And again, it just allows you to move really quick in terms of like shifting incentives around and stuff like this. I agree they're here to stay. I do think there's going to be like one at least major rug where the project team gets like subpoenaed or even an injunction before they ever launch their token, and points people just never get anything, because no one is going to go against against that to like launch their token and do right by the community. So I don't think Eigenlayer was the biggest rug. I think we'll have like way bigger rugs with this system, and it's just like, unfortunately, table stakes. But yeah. Should we move on to Eigenlayer and like itself? What people thought. They released this intersubjective work token, which a lot of people were trolling the sort of overly academic nature of the paper and stuff. Sorry?
It's like made up term. So
I mean, that's pretty much what we do in crypto though, right? We like make up terms and
listen. So far, basically, restaking with ETH, and this is like the fundamental reason why they need an Eigen token, is that when you restake with ETH, you can only slash it for like attributable on-chain events, right? And so easiest example of this is like a validator double signs. You can prove that on chain. You can go ahead and slash the ETH. Okay. But there's a lot of faults that you can't prove with any on-chain data. And these could be like Oracle mispricings or like data withholding. Okay. And data withholding in like a DA layer is the most dangerous attack. And you have to like resort to social slashing through that. And so that's essentially like why the Eigen token is plugged in here. It is to, you can't use, if there's like a data withholding attack on Eigen DA, you can't slash the ETH without like forking Ethereum. And so at this point,
you can slash the ETH to be clear.
Not for data withholding, not for a non-attributable fault. You can only slash.
I mean, the committee can choose to slash the ETH that's restaked into Eigenlayer for sure. The issue is what you're saying, that you can't go down all the way. If you disagree with the committee, you can't fork ETH, right? And that's where the Eigen token comes in. They have this like sort of defense against mob rule or majority rule, where you can actually fork the Eigen token, and then the entire crypto community can effectively decide. So not just the committee, not just the Eigen token holders, the entire crypto community effectively gets to vote on this dispute by choosing which fork to support. That's I think what the difference is, because social consensus ultimately to me means like who decides what chain is valid, right? What fork is valid. And that's what like if Vitalik wrote about, and with his concerns with Eigenlayer and don't overload Ethereum's social consensus. And so like this to me is I'm sorry to interrupt you, but it's like a really elegant way of creating this like effectively crypto native court system where you can adjudicate on subjective disputes or intersubjective, whatever you want to call them, things that like reasonable people can agree on, which is, if you think about it, is all the things that we specify in legal contracts, right? Like legal contracts, there's very few things that are deterministic about the world and about like coordination generally. Like you can maybe specify like a revenue target and an earnout or something like this, but even that like can have some fuzziness to it. Most things are like reasonable expectations, best efforts. Like there's all this fuzzy language in legal contracts or even in Oracle disputes and things like this. And I feel like that's what this, like you're extending this proof of stake like slashing mechanism, skin in the game slashing mechanism to any subjective dispute in this really elegant way that's pretty well thought out, where you're not dependent on a committee because you have the ability to do this fork rule, unlike Aragon Court or Claris before it. So I don't know. I thought it was like pretty interesting, actually. Like I don't know what
just
the use
like
case,
not sure. That's the thing. Like I'm not sure who's gonna actually want to use this. I think that most of the AVSs are just gonna be first party Eigen layer ones.
I mean, I think an Oracle is low hanging fruit.
Yeah, but Eigen will probably just do that, Eigen Oracle. And so I think that Eigen will just start looking more and more like an L1 in that sense, where they just have their own AVSs. And because I don't know the incentive for a third party to come in and be like, yeah, we want to use Eigen, we want to use the E3 stake, we want to use the Eigen token for these intersubjective faults. It's like, where does the project's token like fall in here?
I agree. But I also don't think crypto primitives in general get invented in response to user needs. It's more like a cool primitive gets invented and then developers tinker with it until they find something that has like product market fit. Like I could think of use cases like, for instance, insurance for oracles, right? As Oracle, like Pith started implementing insurance models where you stake Pith and you get and you basically get some insurance that if they serve you a wrong price, you can get reimbursed for that. Then at some point you might not want to just rely on Pith for that, right? You might want a court that can, if you disagree with Pith, if you think they fucked you and they should reimburse you, you can go to like the Supreme Court and appeal it to Eigen or whatever. Another example I can think of is like Circle released their reversible token standard, which I thought was pretty interesting, which is the idea that you can wrap USDC or any token in this reversible token, and then there's a challenge period where you can challenge a transaction, and if the court agrees, you can revert it. Like the court there could be an Eigen-backed court, right? I think there's other things as well that you can think of that could be done with this. So I don't know. I think I'm a nerd for this stuff. Like I was bullish on Aragon Court back in the day. Rest in peace. So, but I do think it's like very interesting and well thought out. Also, the way they've thought about like B-Eigen and Eigen and like so that Eigen can get integrated into DeFi, but you can still fork. I think it's pretty clever.
The court stuff is tricky though. Like even just from doing the Aragon deep dive in 2020 and doing that, where the disconnect between the value at stake and the recourse for bad judgments was hard to match. Where the value
that was the case there.
Right. So basically your decision impacts X dollars of value, but it's hard to have those that are making the judgment have anything anywhere nearly that much at stake to ensure that.
Well, that's what's cool about this model though, right?
Right.
Like with
and
this,
that's what I was going to go into. Yeah.
sorry.
Right, like the fact that you can kind of tie, but you still have to have those individual users put up that stake, right? So like, yes, you have Eigen itself is incredibly valuable, but it's also the people making the decision have to have.
Well, the people making the decision can get slashed, but ultimately any dispute is backed by the entire market cap of Eigen, right? Because of this fork choice rule, like effectively, because you can like, so when, and again, like I just it's fresh in my mind, but like basically if you disagree with a dispute, you can initiate a fork, right? And then if your fork gets supported, you basically, your bounty is the entire Eigen market cap, right? So to some extent, every dispute here is backed by all of the Eigen market cap. And obviously there's like cost for creating disputes. So for very small disputes, it would never be economical for you to do this fork. But yeah, I think that's
be the entire supply. Like what if you have multiple disputes at the same time?
If you have multiple disputes at the same time, what do you mean?
So
I think the idea is that there will be like an AVS or whatever that's staked Eigen on one dispute. But if you disagree with that, you can fork, right? And then that's when you tap into the effectively like the entire market cap. I think it's
pretty operationally heavy for all these people too, because you've got to run you have to participate in like governance and social consensus on all these different AVSs, right?
For sure. So I think this will be very well paid, right? Like lawyers are very well paid. I think the social this stuff more yeah. I think it'll be pretty well paid.
Yeah. I think, in my opinion, Eigen is like kind of interesting, I guess. I'm not like as hyped as other people. It's possible that it turns out to be pretty successful.
Yeah, so I wasn't very hyped on the restaking stuff because I think economic security is mostly a meme, like no one really cares. And also you're kind of competing with projects not launching their own native tokens to secure their stuff. So I didn't think there would be like too many use cases for that. Definitely nothing to justify a decent yield on $15 billion of capital. But this stuff I think opens up like a really massive market.
So is restaking the Trojan horse for them to launch a court?
I guess so. Yeah, it's interesting. You basically have like ETH for anything that's like objective, provable. And then if you want to tap into a social consensus, you have Eigen. You could even do like stack both, I think. Have like ETH as the base layer and then Eigen as a court of appeals or whatever. But yeah, I don't want to belabor this. I know we want to move on to some other topics. Does anyone have anything else to say about Eigen or the airdrop? No? All right, let's move on to markets then. We had a lot of people wanting us to talk about whether it's all over again, but I believe today we are back. So we kind of missed time. This should have talked about it yesterday when it was over. But yeah, what does everyone think?
Could be over in like an hour again. So but as of 11:15 EST, we are back.
I think that
yeah. Go
ahead. You go on.
No, I mean the whole it's over. Obviously you can't say anything with certainty. It's all probabilities. But I'd say pretty low probability that it's over. You had a bunch of catalysts that kind of exhausted themselves, right? And so you had all the hype from the ETF and kind of everything else that happened. And so, it's natural for there to be profit taking from people that were in it simply for that reason, particularly after, multiple rejections of all-time high. But Bitcoin has kind of cemented itself now as a macro asset through these rails. And so I think, you have the combination of slow drip from passive 401k buyers, which we've never really had before, and just rails and trust for buyers to come in that weren't previously available. So I think, it will gradually trade more and more like a macro asset. Obviously the narratives tend to change based on what happens. And so it's still somewhat of a new asset, but it's large enough now and institutionalized enough that I think the macro forces at play that everyone's kind of aware of over longer time horizons should be strong enough to serve as kind of tailwinds for Bitcoin. And we see Bitcoin goes up, everything else kind of does too. And so I think for that reason alone, it's not really over. And it won't be for quite some time.
I mean, when I look at the chart, I see textbook complex pullback. So, but also like, I don't know, today it's like whenever Bitcoin and Sol are up and ETH BTC is down all in the same day, that's kind of been like the textbook for this cycle so far, is like when those three things are all going on. And so
I think Sol looks really good here. I'm also long Sol, disclosure, but I think it looks good. It got hammered from 200 down to 115.
Yeah, it's also
got
all
the fact
that
that those
estate
auctions
stuff.
the auctions that were closing at such a minor discount to spot is incredibly bullish, right? It's just like that is to some extent a floor, and also just signaling the appetite. So you probably saw some selling that was happening from people that were long-term Sol bulls and say, I'm going to hold this thing for a while anyway, so why not collect the spread in between the discount, basically. And so I'll sell it at 140, 150 and buy it in the auction at a discount. And if I'm selling it at the same future date, either way, why not lock that in? And so I think that probably contributed to some of the selling, but also now seeing, how small of a difference there is between people willing to lock it up for years versus buying it spot is a pretty strong signal for just broader support for that asset.
Yeah, and for context, the auction. So the first set of auctions, I think, was like $60 Sol or $65.
64, and they sold 2/3 of the estate of 41 mil, and then this last one was only like 1.8, I think. So they still got like 12 mil Sol left, and the next one, I think they're opening it to like non-US and then US accredited to the public. There's also people launching like SPVs for this, but it's also, I think, just going to be a way to like rake fees.
That's the
Um,
thing. That's the thing that makes me a little bit less bullish. Definitely bullish given the where the auction ended up. But like, there's a lot of people just raising SPVs for this, and like with the staking yield that you get, because you basically get staking yield on your principal. So you're effectively getting whatever. If you like, if you buy it at 50 and it's at 150 and it's like 7% yield, you're getting like 21% yield, right, every year. So it ends up like looking very attractive for TradFi boomers that probably don't even know how to buy this stuff spot. And so there's a bunch of people spinning up SPVs and doing decks for this, as someone who got sent a few, which makes me a little bit less bullish. But yeah,
but they still have to.
But the
find
SPVs are still
buyers.
raising. Yeah, I was gonna say it's still people saying yes.
Yeah,
I
for
want
sure.
to buy this.
For sure.
Yeah, they could be getting tricked a little bit. But literally, the SOL price is at 120 yesterday, like 122 yesterday morning, and it just announced they closed at 100. It's like, okay, I'm gonna take a 4-year lock on like
yeah, but it wasn't trading.
Worth of SOL.
But it wasn't trading there when like the bids were due.
But like, I feel like it was trading at like maybe 130.
No, it was like 150-ish. I think the bids were due April 25th. That's what the article said, at least. And if you look, it was around like 150 then. So it's like a 1/3 discount.
April
if it closed
25th.
around 100. Yeah. I think that's when they were due.
April 25th is at 140. Yeah. So I still feel like that's pretty good.
On the we're back, it's over thing, right? I think part of what's contributing are the pretty big outflows, and
it's just today, like today or yesterday.
Well, so part of it's crypto Twitter and the crypto space as a whole is really tracking every single tick of every single thing, and so you're gonna, if you see a consistent stream of inflows and then all of a sudden it changes, it like everyone thinks it's complete reverses. But if you look, these ETFs have inflows, have outflows. Why do they have inflows and outflows? It's people are basically people holding the ETF shares are trading, and then the APs come in and basically so the idea is if someone sells a bunch of ETF shares, an AP would come in. If so it's the market cap of the ETF. So IBIT shares times price, and then is the market cap of the ETF relative to the NAV of the underlying. So how many Bitcoin the ETF is holding times Bitcoin price. And so when people come in and start selling the shares, you basically have a discount where the market cap of the shares is cheaper than the NAV. So you can come in as an AP, which is Jane Street and other businesses, buy the market cap, buy the ETF shares, and then redeem it for the underlying and sell the Bitcoin. So it's not like this massive outflow. It's just kind of people trading in and out. I think probably what surprised people a bit was the expectation that these were diamond-handed buyers, because it's partially mom and pop and partially a bunch of others buying for the long run in their 401k or buying passively in other strategies. And so I think that's probably what shook people, where there's that disconnect. But ultimately it doesn't really take that much to create outflows. It's just if they're selling and there's not really that much of a bid in the ETF, then the market cap will trade at a discount and cause a lot of redemption. So I think
it went from 74 to 56. I don't know why you wouldn't have outflows. Like, I don't really see how it's that big.
Like held pretty steady, other than the grayscale, up until yesterday, and then like Fidelity puked a lot. Like this is the biggest non-grayscale outflow there's been. Like,
there was over $500 million yesterday, which includes grayscale,
almost
but
like
still,
5%.
Yeah.
But I think that
of net flows.
Yeah, but I think like even like the top right was when just like flows into the ETF kind of topped out, and then flows in the ETF just kind of went sideways for like 7 weeks. And I think the bottom could be like this big puke of outflows, but we'll see. Like I think Bitcoin's holding up pretty well considering that. Like if this had happened like when there's like more leverage in the system, I could have seen us like puking on that, but leverage really got cleaned out. Like OI's down like almost 30, like a third from 75 billion down to like 50 billion, and funding's pretty much reset. Like,
funding is back to like October, November.
Bitcoin,
pardon?
Alt stopped going down.
Yeah,
It was
Yeah.
you almost like you had that big wipe, and then alts have kind of floored, and whereas BTC is still kind of making lower lows, or not lower lows, but yeah, trending lower.
Yeah, I think things look pretty good right
The
now.
good thing on the GBTC side is that's like an expiring negative catalyst, right? As those flows, there's a set amount, and they can only really once that runs out.
All right. I find this flow shit so boring. Can we move on, or do you want to keep talking about this a little bit longer?
Yeah, we can move on. I don't care about flows either.
Yeah.
I mean, the last thing that we had on the docket is a bit controversial. You guys thought it was too boring to talk about, just the lending stuff. Do we want to touch on it?
You're getting bored?
Yeah.
I don't know. Why don't you explain Aave V4 and why it's important?
Yeah, I mean, Jan's already looking at one of his other screens.
But basically, I guess on the market stuff to wrap up, I feel like we're feeling pretty good after this pullback.
We're bullish.
Yeah.
Yeah.
Pretty good.
I'm always
we were bullish
bullish,
before
though,
the
man.
pullback, though. To be honest. So I mean,
Last week, were we bullish? I feel like the tone was pretty sad last week.
That's true, actually. You got or 2 weeks ago, whatever.
Yeah, we had Jason on. So.
The Bear King, who turned Meme King. Yeah.
So yeah, I think things are looking decent here. But I am the one thing that I think it would be cool to talk about the market dynamics is like I agree Bitcoin's gonna recover, but it's like kind of then you go into all these alts, which like obviously if Bitcoin goes up, these alts are probably gonna go up again. But I still feel like there's a lot more supply on the market of these coins.
No, like the dispersion is definitely real.
We've talked about this like loads though, right? This
it's
alts with high FDVs and unlocks are dangerous.
No, well, it's more so what bounced, right? you like Popcat and just soul memes bounced the hardest, which is hilarious. Like it's pretty
I'm still waiting for the fundamentals.
Banana is waiting pretty hard.
I find that there's also like this general angst I think about this stuff, right? Like a lot of people are pretty depressed about and angry about the memes, and then on the other side there's people that are like, this is the future of culture or whatever. I don't know. I feel like this bull cycle has been a bit disappointing in terms of actual innovation compared to past ones. Feels like a lot of infra, you know, with not many applications, and then memes. And I do think like memes are interesting. Obviously, I'm long a bunch of memes, but I do think we need actual applications if any of this stuff is going to be valuable outside of BTC. Like we need real applications that people enjoy using.
The counter to that, and I'm in a similar camp where I was I think more excited last time around because the primitives of DeFi were being built, and so there's still a lot of open space for what could happen, and I think everyone's imagination was kind of going wild. The argument for the meme stuff being constructive is that it is bringing in a lot of users, right? Granted, it's kind of chasing these memes, but if we want to build apps, I think building apps not there's two kind of approaches, right? You can build apps for the native user base, and then you can try and build apps to bring in normies. It's definitely easier to build apps for the native user base because the onboarding frictions are different, and so it's a lot easier for them to start engaging with your app. So what you can argue that memes are helping is they're increasing the low hanging TAM for these apps, and so like yes, obviously long memes and to some extent not enjoying longing them as much as longing stuff that you think is fundamentally compelling, but all of the users that are coming in to chase memes are potential users for actual apps rather than kind of
could get people comfortable with holding crypto, which I guess as a meme non-enjoyer is a decent use case. I feel like honestly the tokenization stuff, they're seeing BlackRock do a bit, like that's one avenue where we could actually get some real use case. That I feel like it's a really long road. I feel like the low hanging fruit and like lower friction stuff is games. Like if we had some good games that like incorporated crypto into the economy, just like so actually fun games to play that people play for free already and dedicate like a lot of their life to, and also, you know, will spend a lot of money on. If you were to get like a World of Warcraft level game of complexity and popularity and layer on crypto to that, like I think it would be pretty epic. And I'm still kind of holding out for that because that's like a Trojan horse into like the younger generation, getting them like familiar with these digital currencies and assets, and also like digital money that they could honestly like feel more comfortable holding over time than holding money in their bank account, because it's like really theirs, can't be inflated away. I think that's really where you see the mass adoption come from. I don't really see where else it comes from. It's either like the very like regulated tokenized financial route, or like kind of money and, you know, countries that's financial system isn't as stable. And then the more one where like you get a lot of people is games, I think is the big one. But we haven't seen that yet.
The development of just like now we're bringing in users for a bunch of different reasons, which was kind of, you know, super bullish on the crypto side. One thing on that front, on the user base side, curious, you know, you've seen the numbers that Base is onboarding all of these users and all of these new addresses, and there's, I forget how many, it's like 20 to 30 billion of USDC on Base. What's it? But I haven't really seen, but I haven't really seen much activity though. So I'm curious to see, like, to understand what, if anyone has an opinion there, so like what's actually happening and yeah, how those metrics have been so up and to the right.
I don't know. I haven't heard much.
I don't know. Yeah, there's not much to do on Base.
Right, but like there's like the dashboard showing the amount of new users.
Yeah, I guess it's Coinbase Wallet maybe that has like an onboarding flow there. I'm not too sure, honestly.
Yeah, that could definitely be it.
Coinbase Wallet is pretty good, by the way. The centralized exchange wallets in general are actually pretty good. In Dubai, I heard OKX has like 600 people working on their wallet, which blew my mind.
They have a big Ordinals wallet now too.
600
right?
people?
Yeah, I was like, Jesus. But it's a really good wallet. So yeah, I think those use cases are interesting. I do still think tokens are a massive use case, and meme coins kind of fall into that. And like, I think AI crypto is going to be a really big narrative, even just because of the fact that it's so hyped that it presents just such a massive bounty. If you're a smart AI developer and you want to build something, you could either join OpenAI and obviously make massive money, or you can launch a token and have way higher upside and be liquid, you know, versus getting OpenAI stock or whatever. So I think that on its own is going to drive a bunch of interesting innovation. And I just see crypto as like the business model for open source AI. So I'm kind of excited about that narrative alongside the game stuff and some of the others. Yeah. So the lending thing got rugged. I'll just do a quick summary on it, basically. So yeah, with lending and like anything that has leverage, you have to decide on risk parameters, right? There needs to be some way to arrive at LTVs and liquidation levels and stuff like this. Historically, there's like two different approaches. The first one is delegate that decision to a group of incentivized people with skin in the game, i.e. Aave, delegates it to governance. As a user, you don't need to think about it. You just go in and deposit and trust that the Aave governance is doing a good job. And historically they've done a really good job. They survived through market cycles that killed, you know, most of the centralized lenders. And then the other approach, which is really interesting, which started off with Rari back in the day, is to make it more market driven. And you can basically make it market driven in two ways. The first one is to let anyone create a lending market with and select their own parameters, right? Their own Oracle, their own LTV, and then basically lenders will choose which markets they want to deposit on based on who created them, the risk parameters, stuff like this. And there's like kind of a market clearing, sort of the best lending markets compete on the market and hopefully win. and that didn't really work with Rari, but it is working pretty well with Morpho, which is interesting. And then there's like, I guess, a third approach to finding market rates, which is Agena, where rather than delegating this to managers, you actually delegate it to the users themselves, who can set like ranges similar to UniV3. And then and Euler is somewhere in the middle too. And I think Aave v4 is really cool because it makes Aave kind of a middle ground between the more modular approach and the delegated approach. I think it's a really good. I think Aave is a really good product. I think this unified liquidity layer is a really good product. They're doing an app chain, or they talk about doing an app chain or an app specific rollup, which is pretty cool. And in general, I just think it's awesome to see a project that literally has existed for like 7 years, right? Since it was Lend in the ICO days, continue to build and innovate. Like you have this decentralized governance community that's effectively paying a centralized company to develop for them. And there's a bunch of different centralized companies that are all contributing to the governance. And to me, it's an example of like actual innovation in DeFi, cool stuff being built and decentralized governance working like that. You know, it's for better or for worse, it's very decentralized. Like all these arguments happen in public with, you know, Mark Zeller going mad at people and being rude and, you know, Stanley weighing in and all this stuff. And I think, yeah, it's cool. It's one of the OG crypto projects. So yeah, that was it really. I think it's a more interesting product than, well, I don't know. What do you guys think? I guess, do you have takes, or do you want to just close it up?
I really like, how competitive is it going to be to like Morpho now?
I think Morpho is still going to be better for what they're good at, like, you know, the Maker Athena deal, or like these DAOs that want to do specific markets. Like I think Morpho is still going to be the go-to for that. I think if you want to borrow against your assets, like in a generalized way, I still think Aave is going to be the best for that. It's like slightly different use cases. Yeah. All right. I guess you guys are right. That was a bit of a buzzkill. Shall we?
I mean, I just don't know what to say.
I said that before the show.
Yeah.
It's like, what are people going to do with that information?
Just not be financial nihilists and say that it's all just memes and scams.
I know, but this is still but this is all like, I feel like the only thing, okay, that's like the same with Perpdex. It's like we've built these like financialization tools, but we're still not doing anything.
Yeah, we still need the right product.
We've built more ways to speculate. Like, I would be really cool to talk about like a BTC like native lending market. Like that would be cool, because I think that's like Bitcoin.
No. Another way to speculate still.
Yeah,
like,
that's
No, it's different. It's different because Bitcoin is like actually competing for like money, right? Like your shit coins that can't get listed on Aave are not competing for money. You're competing for like getting liquidity on them.
What do you mean?
Like
Bitcoin's got ETH, WBTC, make like, yeah.
I know. I'm not saying on that can't get listed on Aave, like, you know, on these more like Rari type lending markets. But like Bitcoin is like, you know, actually competing for like global money. So like you probably need a lending market on that. Like that's what I'm more.
I don't know. I think you have censorship resistant like assets. You need censorship resistant financial system, and it needs to be more and more efficient to be able to compete with the traditional financial system. And like once you've onboarded RWAs and stuff, and you have things that people want to trade on chain, which is slowly happening, suddenly you have a whole censorship resistant financial system built on top of it, where you can like.
But I feel like that any time there's like RWAs, it's like they're gonna be like the RWA issue is gonna be involved in that, like borrow lend.
Can you have DeFi on Bitcoin with 10-minute block times?
It's happening.
You have to use like a roll up, so you have to get
everything that's happening is
like
mostly side chains.
Yeah, which at that point is like might as well be or Solana or whatever.
Well, I guess the thing is like having actual native like settlement on the Bitcoin. It's like not just like trusting BitGo.
If you can get a real
roll-ups,
yeah,
but they're going to be slow as fuck. Or you're going to have to wait 10 minutes between transactions.
Yeah, but that's okay if you're doing like,
yeah,
you know, Bitcoin lending.
It's more on the liquidation front that you can't have 10 minutes happen.
Well, yeah, over time, 10 minutes is fine. Well, yeah, you don't let them lever up like you just have more of a tiered system, and like as things get less volatile.
I mean, you can have low leverage and still get liquidated on these.
No, but I feel like
over-collateralized.
tiered, like you need to deposit more collateral by a certain time or something. Like if you get to a lower, like you can only take out a certain LTV and then you have to deposit more as you go down.
I mean, some blocks take an hour, right? So it's not like it's always 10 minutes. It's not a fixed time. I bought an ordinal once and it took 45 minutes. So that was like my first experience.
You can't really get around that without trusting someone else.
Yeah.
So
I'll let Michael Saylor manage it. It's okay. I trust him.
Apparently, Saylor's doing some ordinals thing.
I know.
No way.
The ID.
Yeah.
Well, he's doing the ID thing.
The digital Bitcoin identity.
So the Bitcoiners really hate him now.
Big if true. What do you mean? Who hates him?
No, because Saylor's like anti-privacy, he's just like pure like regulate the shit out of this thing, just make the number go up. So he's not really a real Bitcoiner, like from the ethos perspective.
Oh,
so I understand why people don't like him. Like he's not really for the cause.
I think he is for the cause of hard money, which is important.
He says regulate the shit out of everything else and make Bitcoin number go up. Yeah. Sorry, say that again.
I said, what is a real Bitcoiner? How would you define that?
You just stack sats. You eat red meat. You have guns. You live out in a ranch. You're self-reliant.
No, not like that.
You got guns
more
and
like
knives and.
I think if you're
knives.
Well, I mean, like appreciating privacy, like
right.
The privacy issue is a tricky one, but like Bitcoin wasn't built for like that in mind.
Right. It's actually kind of ironic that the ETF will be the most private way to own Bitcoin now. You'll have more privacy.
I mean,
with
private
yeah, you
from
will.
who?
No, you'll have more privacy Bitcoin than any other in the ETF than any other way.
Those samurai wallet people got arrested.
But what do you mean though?
Right?
Because I mean,
Not really.
Your account is registered to your name, your social security number, or
yeah. I mean, but you can't. Bitcoin is a public chain, so you can already not hide it from the government, and everybody else sees it too. At least with the ETF, it's like commingled with the rest of the ETF.
I mean,
only if people have access to like
you don't
your
see
bank
it on
account.
chain, but you don't know. Like you could see the wallet has the asset, but you don't know who owns the wallet. Like the government doesn't really know who owns the wallet, whereas ETF, like they know how much you own in your brokerage account.
You're conflating. I think you're conflating the censorship resistance of it with the privacy of it.
I think you're
but like privacy from who? Right, privacy from the government.
Privacy
or
from
on-chain sleuths looking at your wallet, but don't actually know whose name is associated with the wallet.
Yeah, and from like the chain analysis of the world and all that.
I'd rather have privacy.
At worst,
from
chain analysis ends up
than
with the information that the government already has, though, right? Like,
yeah, exactly.
Anyway, I feel like we should
end this.
We should end this. This was a really good one, though. Thanks everyone for tuning in, and we'll see you in 2 weeks for the next episode of the Hive Mind. Bye.
Sweet. Bye.
Nothing said on the Hive Mind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.